Good morning, traders. Chris Buss here with your morning look at markets for Tuesday, May 4th. Okay, quick look at futures. Oil is up 1.8%. Other than that, I don't see a whole lot happening. A lot of red figures, but fractions, less than 0.2% across the board. At least that's what I saw here at 6:30. So let's dive into it. I named this morning's before the bell, stay patient. We're trapped in very narrow trading ranges. That can lead to problems. I mean, you're welcome to try and trade those tight ranges, but it can end up being very frustrating and very choppy and kind of put a lot of effort in that doesn't really materialize in any rewards. It just kind of chops you up. So I think the watchword right now is patient. If you're focused on the indexes and FATMAAN names, there's stuff moving everywhere in the market, as we know. But for the ones that we're focused on as far as our intraday trading goes, I think it's a time to be patient. For instance, back here, I mean, you can trade this. That's a $7 range, up to the top, down, up to the top. I mean, that you can make some money there. But when you're in this right here, trading in a $1 to $2 range for a week, fake pop outs and then bringing it back, I mean, that's tough trading. So stay patient. Let's wait for breakouts or breakdowns, at least some objective levels where we can shoot against, where we've got some decent upside or decent downside to capture. For the SPY 2-hour, what I'm keying off of is this uptrend line support, the 420 level for the breakout, and the 416.75 for the breakdown in conjunction with this uptrend line. If we go down to the 30-minute chart, we've got a gap from yesterday that has yet to be filled. I looked in the pre-market where we're right in the middle of this range. I'm kind of the opinion that it's going to come down and test the bottom of the box again. If you get that move and you come down here to support, at least that's an objective level where you can say, okay, we're at the bottom of the box. It's continued to hold. I'm going to try a long here and play for $2 and maybe $4. If we can pop 418.50 and get up to 420, that would be a nice trade. The flip side of that is a breakdown, of course, below 416.75, and then you've got several dollars of downside down to 414, and probably even lower given how long we've consolidated in this area. I doubt we just come down here just a little bit and then go right back up to the highs. So I think if we get a breakdown from 416.75, you would come down to at least 414 and probably even back down to the bottom of this prior range towards 411, 410. Same thing on the Qs, 2-hour. We've got a nice uptrend line to shoot against. We've got a gap at 33.74. If you got to move down to the uptrend line and the top of the gap, I think that would be a location where it would be objective to try a long, see if it can hold the gap and hold this trading range. That way you could play back for a run towards 342, and that would give you, let's say we got in around 334, that would give you the opportunity for an $8 run, and I think that's worth it. Now, if you get stopped out and price breaks below, then I think you've got some significant downside. Really, this trading range is $8. So I would say $8 of downside from 334. That would put you down towards 326. And then there, I think you just fill this gap and come to 324. And we know that was a really important level. Support, you can go back in the charts as well. So, resistance, 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 breakout. So now all that is support at 324. And if 324 goes, then we got a lot bigger issues to deal with. So let's look at it on the 30-minute chart. We had the move up yesterday to 340, which was rejected. Now we've come impulsively down and have formed a bear flag sitting on the top of this gap at 335.85 down to 335.20. So today I would be looking for a move most likely to fill this gap and then come down and test this 335, which is an important level because it held the last two times, support here, support here. So I think these are the objective levels to look at, and if it's gonna hold and bounce, those would be objective levels to try. But remember, on the way back up, you'll have resistance at 337.25, 338.50, 340. So there's a lot of work to do on the upside of chewing back through all of these overhead resistance levels. IWM, I think a lot rides on this 225.50 area. We broke below it just for a moment, then popped back above. I think if you lose 225.50, then you're coming into 223 pretty quickly, and even potentially down into the low 220s. We do have a shallow trend line here that we can watch. If we were to get all the way down, and then break 219, break 218, then I think you're looking at 215 and possibly lower from there. But support is support until it's broken. If you want to try along against 225.50, that's certainly objective, and then you'd be looking for more or less 228 and then 229 on the upside. Here's the 30-minute chart. You can see yesterday it got up here to 227. I've taken out the gap that was filled. Price got up to 227 yesterday and, fell off kind of hard here right at the end. And so this 225.50 is going to be your pivot for today. Let's look at the Fat Man really quickly. Facebook, inside the bracket on the low side, hanging above 321.61. So the bottom of the bracket and the top of the gap at 321.61 is your pivot. As long as it stays above, you can be long and look for 330. If it drops below, then that opens the door for this gap fill down to 307. I don't, as we go through these Fat Man names, I don't really see, for instance, Facebook breaking down into the gap all by itself while, Amazon and Apple and all those guys just keep grinding along. I think there's going to be a move together, and I think then we'll see if it's a down move, I think we'll see then a lot of these gaps start to fail if that's what's going to happen. So you can be long against 321.61, but you got to be, psychologically ready and ready on your platform to abandon that long idea if you get the breakdown, because things will start moving fast at that point if the Qs all of a sudden decide to let go down here at the bottom of the range. Apple, same thing. I looked pre-market, trading in here around 132. Really, the only thing that matters is 131.50 at the bottom of the trading range. If you want to try a long against 131.50, it's perfectly objective. But again, if it breaks, you got to quickly get out of that position and then look to the short side. The trading range is $3.50 wide. So 350 from 131.50 is going to put you down to 128, and this gap, which I imagine would go ahead and fill, and that would bring us down towards this 127 level that we know was big resistance back in the chart. So that, 127 is going to be an important level if we go to the downside. But support is support until it's broken. We could thrash around in this range for a while, or if the market gets its footing, can even break out above 135 and then 137 and then off to new highs. Tesla, bounce off of 670, which is a major pivot, came up here, got rejected at that band between 707.50 and 710. Now we're back in the middle of the range. I think you got to wait for a touch of 670 or back at 710 to get back to objective trading locations. So I don't think there's anything to do right here until we get that move either higher or lower to the bottom or top of the range. And remember, ARK, Kathy Wood's fund, ARKK ETF, is a decent proxy for Tesla. If you're not really into trading Tesla, the premium's too high, whatever the deal is, you can look to ARK for a trading proxy, because if 670 breaks, you're going to be coming down to 625 and probably down to 600. Given all this trading action up here, breaking, that would make that look like this whole break above was fake. I think you're going to get more than a $25 move out of this. I think you're going to get at least 50. And if that happens, I think ARK is going to be going right along with it. So that may be an alternate trade on Tesla if it breaks down. Now on the upside, a breakout above 710 would target 725 and then 750 and then 780. Microsoft, negative earnings reaction. Another leg lower, now consolidating between 249 and 254. Right here at 252, kind of halfway in between, you could put a midpoint line between that trading range and trade around it. But otherwise, you got to wait for a touch of 254 or a touch of 249 before deciding, whether to take a long or a short position, or if you're going to wait for a breakout or a breakdown in Microsoft. And I'm sure you've heard the news by now. Bill and Melinda Gates are getting divorced, and I don't know if that's going to cause any turbulence in the stock. I'm sure that's going to take a while to play out, but I guess Melinda would be like an independent shareholder at that point, not locked up with I guess Bill is still the executive chairman and bound by some rules about how he can handle stock. So if, Melinda gets a bunch of shares and wants to fund her charities, that may be a source of selling down the road. So we'll have to see how that plays out. But anyways, right here in the middle, I don't think there's much to do. Be patient. Wait for a move to 249 or 254. Amazon, I think the key is 3,400. That's a main pivot location. Above, I think you're okay to be long with a tight stop below. But below here, below 3,400, I think you're vulnerable down to 3,350. Keep using these $50 increments. They have worked. I mean, go back in the chart. They've worked as like a champ. So 3,400 your pivot, and I would use that today if you want to actively trade it. Google looks a lot like Facebook from the standpoint, had the initial pop and now it's consolidating within the bracket. I had the top of the gap at 23.53 and we're $10 below that now. And we have a gap that's $60 wide from 23.53 to 22.91. So from a technical standpoint, the door's open for that gap fill. So if you got short yesterday on the break below, maintain your stop. If it pops up, respect your stop. You're taken out of the position. But until then, I think you can stay short. And if the cues do in fact fall apart, then you're already in, and you'll probably see Google fade with the market if we get that kind of move. Netflix, a nice example of a bracket trade that we set up. The gap down on earnings. We marked the high of the move and the low of the move. So now we've got a range between 500 and 515. Bottom, top. Now we're in the middle. If you're, a longer term swing trader, just sit tight, wait for a breakout above 515 or a breakdown below 500. Then you can establish your, longer term duration position and take it from there with a stop either just above or just below your entry. Okay, if you are new here, I really appreciate you spending some time with me. I hope you are getting some value off of the trading levels that I've identified. I'd like to think they're spot on. I think if you take the levels that I give you as a given and work on your execution around those levels, I think your trading will improve greatly. Hit the subscribe button, hit the like button, then jump over to the show notes where you can register for all my content. You'll get an invite to our trading room. Plus, you'll get all my content delivered to you throughout the day on trade ideas, market observations, etc. For longtime subscribers, I really appreciate you hanging with me. I hope your trading's going well. Hit the like button. Give me a positive comment. Let others know that you appreciate the work and that you're getting value from it. Okay, a couple more things I want to show you. One is SMH. This is one of the semiconductor ETFs. And just in the last day or so, we've had what I think may be an important technical event. This is our uptrend channel off of the March lows, grinding higher, big move, topping out here in the high 250s. But now we have dropped below the channel, dropped below this trend line, and testing this high 230s, 240 area. And the thing to understand is that semis are a risk on, risk off asset, and can often be a canary in the coal mine of what's going on as far as risk appetite goes. So I want to watch SMH really, really closely. You know from prior videos and discussions that some of us have short-term shorts on SMH from last Friday and then into tomorrow. I think if you're in those short positions, I think you're fine. I think if you're not in, I would hold off on a big swing at SMH. I think that would be an aggressive trade to take. And there is, technical backup. If you want to go short against 240 or 242, I think that's fine. But what I really want to see is I want to see the Qs. If this thing is going to break down, I want to see the Qs go along with it. I don't want to be, solely in SMH short and then, have the FATMAAN names rip and the Qs break out, and then have this be kind of like your only short out there. I think if the Qs begin to break down, SMH will go. The gaps on the FATMAAN names will go. And then, we'll have some really well-defined triggers that will key us off on a short-term correction. And the thing that's weird in my mind, with the semis, we've all heard about the shortage. I would think that would mean higher prices. So I don't know where the weakness is coming from. Fundamental reason, I'm not sure. But what I do know is it's not good when price loses such a major uptrend line. So I want to watch that real closely. I think you should too. Even if you're not going to trade it, use it as a risk sentiment indicator. And I think that'll be helpful in the days and weeks ahead. Couple trade ideas. Coke. Coke has already reported pressing up against the prior highs here at 54.50. I think if you get a breakout there, that would be an objective long, and then you can look for the high 50s, maybe even get up to 60. And what we may see here is a rotation into defensive names like Coke, and here's Pepsi. Basically the same chart. They've already reported as well. Price pressing up against the prior high here at 147. I think if you get a breakout here at 137, you're going to get a high level PPO cross. RSI is bullish, heading higher. I think if you get that breakout there, you can be long against 147, and I think you could look for the low 150s. So if things get defensive, I wouldn't be surprised if you get a big, a rotation into defensive names. And here is CVS on the weekly chart. This is a name that we had flagged back in here for a breakout on the weekly chart. It had earnings last night. I checked this morning, trading in the 78, 79 area. So this is a 4-year breakout. So as long as it can hold 74, 75, the door is open for a move much higher. And we can see that this trading range was $20 from 74 down to 54. So $20 onto 74. The technical target on this breakout would be, in the low 90s. So that might be one. Now that the earnings risk has passed, if you get any kind of pullback in here, 76, something like that, that might be worth taking a shot. I mean, just from a risk reward standpoint, let's say you got it at 77. So that's $3 a risk down to 74, but you're playing for $20. So if that were to play out, that's, well worth the risk of that. It's not going to go up like a rocket ship, I wouldn't imagine, but even a name that has broken out to 4-year highs, just grinding higher, I think that would be a nice trade. Okay, let's wrap it up here. Let's see what the day plays out. Stay patient. You're more than welcome to take shots, but don't overtrade. Know exactly what you're shooting for, and make sure that what you're shooting for is worth it. When you start trying to play for 50 cents and $1, it can get rough because, one bar goes the wrong way and then you're stopped out, and you get stopped out a bunch of times during the day. That gets really frustrating. Then you're not ready for the real move that's right around the corner. So be careful, take your time, don't overtrade, let the market come to us. There'll be plenty of time to get well positioned on either a breakout or a breakdown, whatever way the market wants to go. Okay, have a good day of trading. This has been Chris Buss with Trader's Profit Compass. Talk to you next time.